With me is Ghielen, one of the familiar faces within the high dividend team. Carl, welcome.
Thank you.
I understand that your team has undergone some recent changes. Can you elaborate on those?
Of course. We're very happy that we have two former team members rejoining our team again. The first one is Moody Al-Qadr, who used to work for us for 10 years, managing global and US high dividend products. He left for Petercam, where he managed a North American high dividend product very successfully. And he will join us again last week, so April 16. He's going to manage the US high dividend product and taking over from Adour. The second person who is going to join us, also a former team member, is Chris Hermie. He was a co-manager of the global high dividend product before he left for Petercam. He managed a global high dividend product there for 3.5 years. He will join us the 1st of May, again co-managing a global high dividend product. So we're very happy that we have two very experienced people rejoining our team. They have a good knowledge of dividend investing and a good knowledge of the team.
In the most recent quarterly client call, you elaborated on some enhancement that your team carried out in the investment processes. Take us through those enhancements. What do they entail?
Well, as part of the governance of our investment process, we continuously critically review that process that we have. This time we decided to make some enhancements. The goal was to create a bit more flexibility in our investment process and also to expand our universe to navigate better through the investment cycle. So the first enhancement we made was we tested the relative dividend yield threshold as well as the fixed dividend yield threshold. And backtests have shown that the relative dividend yield threshold on a sector and country basis gave better returns risk adjusted. Also, they diversified better the portfolios and avoided unintended macro risk. So that's the first enhancement. The second enhancement is more related to the portfolio construction side. We're going to aim for a higher dividend yield instead of the fixed 1% pickup that we used to have. Why? Because we don't want to buy high dividend yielding stocks only for that reason. Often higher yielders also have some risks attached to them because the dividend could be unsustainable. Finally, we want to introduce the flexibility to buy or keep stocks with low or no dividend yields, but can do so in the next couple of years. So the so-called dividend initiators or re-initiators. Apple used to be a good example a few years ago, but also ING and Citigroup are good examples.
These enhancements, what do they mean in terms of portfolio? Will they change quote-unquote completely?
No, on the contrary. We will keep our value approach. We will stick to our quality bias. We also make our rebalancings. We have a proxy to equal weight. So everything will remain the same. It's only slight enhancements. We will publish a strategy update in the next couple of weeks so that everybody can read it at their own leisure.
Now, Carl, I like proof and I like pudding. And I would like you to tell me the proof of the pudding. How well did our high dividend strategies do in this last quarter, which the circumstances were quite volatile?
In the first quarter, our funds did do very well. We did have a very strong quarter. Almost all our funds outperformed the benchmark. Stock picking, good stock picking, and also sector allocation were due to that. What we also saw is that the value style started to outperform the growth style. And especially in the last month, so the months of March, we saw that the hyper-growth side of the market corrected. You can think of the biotech names who had a very good run last year. Also the social media names had a big correction. So we gained from the outperformance of the value style. Also our positioning was more cyclical. We moved the last quarters more cyclical and being underweighted the consumer side of the market, which proved to be very successful. And we remain that way at the moment as well.
And last but definitely not least, most people will want to know whether you carried out some significant changes to your strategies over the last quarter.
We did not make a lot of changes in the last quarter, only a few. For the European funds, we decided to take some profit in the real estate names, especially the German real estate names became fully valued, so we took some profit there. Also in the healthcare sector, we did take some profit. We prefer still the financials. So within financials, banks still a discount to net asset value. Profitability is increasing, and banks move from a deleveraging phase to a more normal credit cycle. So prefer to be overweight financials. For the US fund, we made two significant changes. The first change was that we increased the financial underweight. So we had a big underweight in financials. We bought some financials, so our underweight is now smaller. We bought the big names, the big cap banks. And the second change was that we decreased our consumer staples sector overweight. So the overweight came a bit down. So we took some profit in a few of the names in that sector. And those were the most significant changes.
That's quite some input you shared with us today. Thank you.
Thanks.